Excuse me. Good morning, everybody. All right. Markets are moving up into what should be the sell zone. See if it makes a turn here. We've got this little gyration on the inflation news. And I guess the bigger news coming tomorrow. We'll see what the reaction is, of course. And, it's got this unfilled gap here, pretty obvious place. Unfilled gap in between the 20 and the 50, both declining, noting the downtrend, both facing down. And typically, and I mentioned this to Dan last night, because looking for whatever's going to turn possibly here, anything time things begin to turn, historically, it's an erratic day. It's had a nice move off of the low, started with a wide range bar. We get off the 200. We can say that's igniting a move within a downtrend. And buyers obviously have been in control for a few days. There's some rejection yesterday. And if today is potentially a turn day, based on this location, they tend to be erratic because buyers aren't going to give it up so easy. And you can see what happened here. I guess the news tomorrow could be the turning point if it viewed to be bearish. And then as we get into Friday or whatever, usually it's going to be a couple of days up here if things are going to roll back over. And one of the possibilities is, which part of our discussion yesterday was on a different stock as well as applying to the markets, is because of the move up, what would have to happen to potentially signal a move higher? And that would be a continuation pattern, which would be like a bullish 180 with wide range bars, what we call a bear sandwich, which is 3 days of whipping back and forth with a bearish bar in between. However, you come to some conclusion as to possibly the whether it's going to go up or down. It tends to be a period of erratic price behavior as buyers and sellers try and figure out, is the downtrend going to continue? Is this upward move against the downtrend because of the strength of the move up? Will it create a support area? So all of those things tend to result in erratic price movement for a few days, and we'll see how that plays out. Being aware of that, we have a bias going into today and possibly into tomorrow. We have to see how today plays out. But, in this area here, you can see on the hourly chart that there's likely to be rejections of this upper area and rejections of a lower area and chop. So we'll keep that in mind. Always put a alert under the prior day's low, give or take. And it's up here. You can see futures, pushing up toward that area. And so I'm bringing an alert under a prior day's low. You may be watching it, maybe not, but this is what we call our first reference point of support. And as prices are moving up, going back to what I just said, sell area zone between the 20 and the 50. You don't see the unfilled gap on the futures, of course, but it's got to violate a prior day's low to have some type of an increasing bearish bias. And so as this happens on the way up, clearly that didn't happen in a few days. And as prices are coming down, the same systematic approach. Oh, I think it's, down a lot. It's extended. Oh, my indicator's oversold. Maybe it's going to turn back higher. All right. Well, can it get a trade above a prior day's high to begin with? Yes or no? And over here, it does. And we get the whip around. And so many times we just reverse the procedure on the way down, prior day's high, so on and so forth, which doesn't change the trend, but it's an obvious change that happened that wasn't happening over the prior days. As you can see here, right? Trades above a prior day's high, but it started to move down, no close above a prior day's high. And just a really simple, systematic way of saying, hey, maybe it's ready for a turn. Oh, there's a green bar. Well, it's on the 50 MA and so on. And of course, we look at pivots and other what's to the left and so on to kind of an intelligent way of figuring out where things are likely to go and where they might turn. All right. So see, prices are within yesterday's range. And since prices are getting closer to this area where sellers are going to be, my cursor looking at where that is on the daily chart, and of course the hourly chart before we go to SPX. I've already inserted the numbers here. And as prices go up, what typically happens is traders begin to bid up strikes that are above the market, sometimes crazy amounts above the market, and they do the same thing on the way down. And so those strikes that are further away, especially as prices get closer to a sell area, those are less likely to get hit versus the ones that are below. Now, looking at where prices are here in relation to where they are, today could be a day for a condor, because the idea of prices being more erratic and choppy, where they're likely to try and make a turn, and there's news tomorrow, they're less likely to go all the way down well below the prior day's low, and they're less likely to continue up past the gap fill. And if they tag the 50 MA, I mean, that's a pretty far move for a day. So, and depending on what they're doing here, just looking at the quotes, as prices move up, you can, say they spike up early in the morning, well, or in the first 5 or 10 minutes, those strikes that I'm posting here can change. So, that 34.15, that's the bottom. The third, where's the type one? Where's that? 34.15. Yeah, that moved up a little bit. So can you go to 44.20? Not really. It's it's not enough. So it's interesting that the difference between those strikes is such a large amount. But if prices should continue to inch up at the open, that 44.20, I would go for that versus the 15, but I think 15 will be okay today. All right, tech has been leading the way, and you can see that pushed up right into this resistance area. Look at all the pivots over there on the hourly time frame. Prices backed off a bit, and I think the same scenario is based on how prices went up. Buyers aren't going to give it up so easy. Where they here right now, they're in the middle of yesterday's range. It's likely to grind around here as traders wait for tomorrow's economic numbers, which are likely to be a much bigger influence than what today's were. Yeah. Transports led the way down. And not such a big deal coming off of that low, but it's a starting point. We'll see what that looks like at the end of the day on Friday, whether we get a decent sized green bar. And this would be a nice pattern going into next week, beginning a slowing momentum candle, bottoming tail bar, green bar, 3 weeks of a consolidation, a dead cross. Okay. Yeah. Good observation, Alex. I didn't even notice that. No. The dead cross is the 50 under the 200. I don't know if there's a name for the 20 under it. Yeah, there is. The death cross is the 50. And I don't know if they have something for the 20, but You can see the way the 20 has been declining right over prices. And so at least some stabilization here. We'll see how it fares. All right, let's look at the NQ futures. Same story, just coming up into what should be a sell area. And just adjust your lines, look to the left. And most platforms have this feature of, just marking off an area like that, because you never know that it's going to be an exact point. And so I like using these areas like that where you can shift them up and down as things progress from day to day. And so by doing that, again, look at your platform, and then you apply it to all the charts of the same instrument. You don't have to be looking at this, of course, because it marks it off in your lower time frame, and that gives you a guide as this is going up and you reach, that red zone. It's like, oh, sellers should be there. So you're setting up your thought process based on your method by doing that. Dow weaker, coming up into resistance, same thing there. The Russell, obvious, right? 220 MA, be lower high, down at the bottom of the trading range. See if that can make a turnaround. And I expect that'll all play out into next week. That's the continuous futures contract. Back here, something happened with the ES on. That's why I put these for the month in there. Something happened with a gap. But, all right, so the you can see here, it's down here at the bottom of the range, and buyers are going to be there. It's just a really simple approach that we use, that starts with, we've said it a gazillion times, just look to the left, because as things come down to support, there's going to be buyers there. Then look and see what the reaction is to it. And then look at, is this in a downtrend? Well, has it become climactic? Is it stabilizing? Bar by bar analysis, bottoming tail bar, inside bar. All right, it's in this area. It's likely to attempt a turn up. Do you want to trade that? Okay, yes. How are you going to trade that? Intraday, day trades, put spreads. Okay, and where else could we take a interest rates? They've been coming down, right? Pretty sharp move down. And part of our conversation in the green room yesterday was, during that time was kind of quiet. So, we go through, hey, what do you think? Hey, we have conversations, which is pretty cool. And so we were talking about this low being the possible low for the year versus I took the other side of the argument, this devil's advocate, whatever, and saying, well, interest rates have been the nemesis of the market, right, going up like that, and they're in a strong uptrend, and they're pulling back to where buyers are going to step up. Well, do I know that? Absolutely no. But anytime I see an uptrend like this with rising moving averages and that kind of strength, the assumption is buyers are going to step up. Where are they going to step up? Well, you say at the 20, in between the 20 and the 50, look to the left, the support. And if buyers step up here and form a buy setup and a turn, and interest rates go back up again, and we've already discussed that equities are in a sell zone area, we could have a move down that breaks the prior low. It's October. And maybe we get some ugliness, who knows, and especially what's going on in the world. Something could happen that ignites that, the news element of it. And then from there, this may make a slightly higher high, double top, whatever. And that could set up the October low. Now, we'll see. And if this continues to drop, at some point, buyers are going to step up anyway. But the further it drops, the greater the probability of the equity low being a really solid low. So that's part of the discussion yesterday and the thought process. But this is now where it could begin to turn up again, and it is stable, and it is stabilizing. TBT, just whip around, but look, it's a solid uptrend. Red bars don't negate an uptrend. All right. Bitcoin. It's just been a mess for so long. Maybe next year. You see, it's just been whipping in this trading range for the longest time. And just giant up bars on the weekly, giant down bars, and it just holds the range. And yeah, so look for some erratic price movement today as we wait for tomorrow's news. Sorry, a new low by the end. No, that was just part of a discussion. I'm not saying we will make a new low by the end of the year. We're not really into making predictions in that way. We follow what the charts say. So my commentary was that interest rates going up, and we started talking about this a couple of months ago, why the market was going to have trouble, and the dollar going up, right, which this is pulled back and it's in a solid uptrend. So common sense tells us that what has been bearish for the market, which this was in 2022, and as we discussed this turning up back here, and we discussed bearish potential for the market, August came, and we know what happened, is that if this goes up and interest rates go up and they move up toward the highs, well, then it's likely that equities are going to go down and possibly break through this low down to a lower level down here at maybe 4,200, which could set up the end of year advance. And so if it did come down here, we would read this as slowing momentum. Right? So remember how we look at momentum: strong momentum, strong momentum. If it made a new low, these lows are closer together and it would be a good place for a turn. So stick with us. Let me hand this over to Dan. And as things progress, you'll see, and we'll all see together, but we have a method for objectively recognizing what's happening in the moment and determining what could happen that could lead to the future. All yours, Dan.
Good morning. Yeah, my bias. We always talk about the bias in the trading room into the close. And yesterday with these 15-minute charts, whoop. Shoot. All right, spiders. So we had this 15-minute. It looked like if the market were still open yesterday, it looked like that was going to be like a late day breakdown. And now it's gapping over it. So that was my bias for, for the morning session. Depends which way we crack on this 15. But as Greg said, a bullish pattern on the 15 here is much different than over here when we're not up so many bars on the daily. We have Fed minutes at 2 o'clock. Now, just innately, I'm not sure why that's a big mover, because it's dated information. But the market doesn't care about me, and recently they have been moving on those minutes, so it's something to keep in mind at 2 o'clock. And then the big number CPI for tomorrow. All right, so all our opens are fine. We have 100% bullish open trades in all 3 letters. As Greg was talking, I just saw this tan breaking out. They were coming for the junk beat up sectors even yesterday. Now, if the market were still open after 4 o'clock yesterday, this is a beautiful, beautiful late day breakout setup. Nice gap up in the morning, bullish price action all day long, breakdown failure. And then you buy the breakout after 2:30 p.m. And it looks like that's what's happening right now, but it's just a bounce in a downtrend. And so if somebody can help me at the open, there's not a whole lot of solar stocks that are liquid, but said, gee, I've been watching this thing for like a month and a half now. And there's just been no sign to get on board yet, but I'm not giving up. I'll get a setup on this thing one of these days. There's been a lot of Plymos pod. Here's another one. RH. Look at that beat up thing, but it's a Climo on the weekly. But it could be the start of something. Ralph Lauren with potential bottoming pattern, but yesterday's action proves that it's still a dog. Bottom right, what's today, Wednesday? So on Monday, we bought ARM, double bottom, capping up. I moved stop break even and gave a target of whatever I said. A little bit over 58 would be a home run first target. IONQ. I'm gonna try to sell some $15 puts for next week. Thomas JD, little foreign. Yeah, day trade, another bottoming pattern. It's an ADR, Chinese internet. Nerdy. I don't think I've heard of that one. Nice closing breakout yesterday, Dave. Closing breakout with a void. I can't tell where it's gapping, but if it takes out yesterday's high, then that's a end of day base will be support for a day trade. So I like it. Yeah, I like it. And we've been in XLU. Beautiful. That's what we call a 2T. 2T for two bottoming tail retest from a Climo with a void. So we're just in simple trail mode on that. Plug downtrend, but I saw a nice gap. Maybe there's some action in the battery sector. I just saw this little guy gapping up, big old gap in a downtrend. Might set up for a day trade. I have no interest in swinging it in the downtrend. SNX bearish gap. I think it said it's going to do a secondary offering. Etwo, I forget what the news was, maybe an earnings release or whatever. Hewlett Packard had some pre-earnings release. There's a bottoming pattern. Notice for the first time, it's still declining 20 MA, but it's been going sideways here and not making a lower low. Climo on the weekly, so that's on my list. I got it on the other computer. Silk, I think, had some bad news in the medical field. Look at that pain, $75, all-time lows, recent IPO. Yeah, you play with fire with bios. Exxon is buying a company, 107. Let's see what it does. There's a sell setup. But this Monday is what we call a bull island reversal. So let's see what it does near this prior low. Could be a put spread for Friday. AZZ, big old gap up. It was either earnings pre-release, whatever, but pattern. RGF, I think a pre-earnings thing, but late volume. Burke is a new IPO today, I think. Merck, Alex gave us. I think that's the best new short setup that I have in my little batter's box over here. I have an alarm at 103 spot 40. Agro, why am I looking at you? Oh, I think Sam I am gave me this. It's sloppy as can be. Maybe put spread, maybe small balance, but I can find better. Scroll, Citral, whatever. Sam gave me this. This is what we call a bear sandwich. So here's another kind of 2T bottom. Notice how this took out the prior low, snap right back. So that's a bullish retest. That would have been a good put spread. Made a higher high. 180 reversal, followed by a 180 reversal, and a price wood. So that's a new directional. Now we go through this all the time where we say, look, I'm not buying the spiders right here, up 3 bars, topping 2. But we still use the spiders as a bias of the tide. Are we fighting the tide, the wind? But this is a fantastic new setup that's not up 3 days with a topping tail. And ideally, it won't trigger if the markets stay neutral or weak. JB Hunt, this has earnings next week, but I mentioned yesterday pre-market. This would have been a good little day and swing trade. Still looks higher. XLY, big old beautiful W bottom. There's still room. We should be searching that entire sector to see, go hunting. SJM, I think, is in it. That's a Climo. I got an alarm 116.20. ARM, we're in. Autodesk put spread idea. Block, bottoming, AI. Oh, SJM just went off right now. So let's give it. Oh, my ARM alarm just went off again. Intel up alarm. We have a 3rd position in that. ARM, let me set a new alarm up. 56, 80, 55. All right, Intel alarm. All right, we bought like half lot of calls yesterday. Make it set higher alarm now. Q's is holding the best yesterday and today. So I'll set an alarm 3730. New low alarm 3640. 30. NEP alarm, that's a Climo I've been watching for a while. No, this is not the Climo. Oh, that's Neo. I had a typo. Hey, but Neo, by the way, is an inverse head and shoulder. I said I like finding spots by a typo. Look at Look at Neo. Beautiful, beautiful day trade plus put spread. So let me look at Neo puts. 90 TE, 12.5 is a little tight, and they're 2 spread at 25 by 90. But nice little day trade there. Setup. NEP, look, it's a 4-bar turn. So